Good morning. Thank you for the kind introduction. Chairperson of the Compliance Association of Banks, my colleagues at the Central Bank, members of the compliance community, CEOs of the banks, and ladies and gentlemen, distinguished invitees for the forum. I think, first of all, I must thank Compliance Association for organizing this forum and initiative, which is very timely and important given the circumstances that we are going through, and also some of the challenges that I will highlight in my speech. So first of all, first one that we are forthcoming is our, as already mentioned, Sri Lanka's third mutual evaluation on the anti-money laundering and countering of financing of terrorism AML safety framework, coordinated by the Asia Pacific Group on Money Laundering, APG, to assess the country's measures to combat money laundering and terrorism financing. That is scheduled to commence from 2026 March. It was earlier scheduled on 2025, but we took one more year, postponed to 1 year, given the elections we had last year. So under this, Sri Lanka is required to ensure that countries technically compliant with the 40 recommendations. I think I'm sure you're all familiar with the recommendations of the Financial Task Force and Sri Lanka's AML safety framework, which should be effective under FATF 11 immediate outcomes. So there are 11 immediate outcomes that we have to be compliant with. So in the past, Sri Lanka has undergone two mutual evaluations, first in 2026 and second, that was in 2014 and 15. Both these evaluations outcomes were not very positive, which resulted in Sri Lanka being listed as a jurisdiction with strategic deficiencies during that period in the AML safety framework, commonly referred to as what we call downgraded to grey list by the FATF. This has created subsequent economic and financial repercussions in several forms. Just to list some of the negative repercussions that if we had to go through again in this negative or grey listing, first, negative impact on correspondent banking relations. So I think I'm sure the bankers, I don't need to highlight this. We are going through this process of corresponding banking challenges that you would face if we are grey listed. Obviously, in the last several years, with the debt standstill and recycling process, we had even severe issues we had in corresponding banking. We are coming out of the crisis and now gradually building up corresponding banking. But in this situation, we don't want to go back to a situation where we again need to face this corresponding banking relationship and this very important requirement for us to move forward in terms of linking up with the global financial markets. Secondly, that negative or grey listing requires extra scrutiny, enhanced due diligence on Sri Lankan customers. This again negative consequences. And additional enhanced due diligence for doing business is again a negative for the economy or recovery of the economy. And also subsequently the negative listing the country by other organizations. We know this EU negatively listed after this grey listing both times. And also high cost of borrowings for Sri Lankans to borrow from open markets. There will be a premium added if there's a grey listing. And obviously negative impact on the country's image when we are trying to improve our credibility and the country's image from investors' perspective. Now this can have a negative impact and reversal of the gains that we have already secured. And obviously, it could also lead to potential downgrading of sovereign rating and credit ratings. That's one of the component that rating agencies are looking at. The AML safety, the ranking is important ingredient that they factor in. Given the above possible negative repercussions on the country, Sri Lanka is required now to showcase a strong performance based on high level of technical compliance and effectiveness. One is a technical compliance Secondly, the effectiveness at the upcoming mutual evaluation. This is the challenge. This is a task that you all will have to support us. The FIU, our Financial Intelligence Unit, located in the Central Bank, is the focal point for 𝗙𝗪𝗁𝗂 framework for Sri Lanka. The FIU has taken numerous efforts in preparing the country for the upcoming mutual evaluation. I'm sure our FIU has been engaging with you continuously, especially with the financial institution. Some of the efforts, I just list few efforts that we have been taking from the FIU. First one is national risk assessment. I'm sure you all were involved. Following the conclusion of the 2021-2022 national risk assessment, the 𝗚RA on MLTF, several gaps and deficiencies of Sri Lanka, our framework, were identified in this assessment. This required urgent attention and systemic monitoring. Also, the FIU has taken steps to update the 𝗚RA as of end June 2024. First one was in 2021, 2022, and then we have updated as of end June 2024. And the 𝗚RA update as of 2024 will be completed and published. And further updated one will be published by June 2025. That's an important reference document for any compliance. Secondly, the national policy on AML-CFT for next 5 years, 2023 to 2028. Now we have developed its second national policy on AML-CFT for this period based on the findings of the updated 𝗚RA. The national policy on AML-CFT is expected to address the threats, vulnerabilities, and risks identified in the 𝗚RA, and the effective implementation of the same in the next 5 years would be imperative for Sri Lanka for us to move and make sure we are in the right path. And the third initiative was a cabinet-approved institution-wise action plan. So basically, on that basis, we come up with the institution-wise action plan. This action plan outlined the actions to rectify the remaining gaps, and these action plans have already been communicated to respective stakeholders for effective implementation to meet the global recommendations on AML-CFT. So we, as a chair of the coordinating committee, we have had several meetings. We have already communicated the action plan to all the stakeholders, including the financial institutions. The institution-wise action plans for 24 public stakeholder institutions, that includes 24 public stakeholder institutions. This is a national effort. This is not only for Central Bank, but for other institutions should get involved. This was drafted based on the FATF requirements to improve the effectiveness and technical compliance, as I mentioned earlier. And this has been approved by the Cabinet of Ministers at the Cabinet meeting held in August 2023. And the same were informed to the relevant stakeholders for their implementation. So we are in the process of implementation of this action plan. Then the fourth, the AML-CFT task force to facilitate and help the implementation. In December 2023, Cabinet of Ministers granted approval to establish 5-member AML-CFT task force with the chairmanship of Honorable Justice 𝗀𝗃 𝗏𝗃, retired Judge of Supreme Court, for monitoring the implementation of the institution-wise action plan. I'm sure our task force has been meeting with a lot of your institutions. And again, under the direction of the new administration, His Excellency President 𝗚𝗏 𝗟𝗃, the AML-CFT task force was reconstituted in December 2024 with the chairmanship of the same Justice 𝗙𝗪𝗏 and with the higher level of representation with 2 cabinet ministers, 1 deputy minister of finance, as well as high officials of the central bank, the ministry level representation to ensure broader government and the highest level support for the implementation of this framework. This task force is empowered with overseeing the aforesaid institution-wise action plan to ensure that identified gaps are addressed comprehensively, timely and effectively, as well as to ensure effective coordination among relevant stakeholders. So task force will certainly coordinate with all the stakeholders. Then the fifth initiative is the mock evaluation that we are planning. That we have hired the international consultant, Dr. Gordon Hook. I'm sure some of you have already engaged with him at the initial stage of engagement, He is an international AML safety consultant. He is assisting Sri Lanka in preparing for the upcoming mutual evaluation. So Dr. Hook will carry out a mock evaluation. Before the evaluation, actually there will be mock evaluation involving stakeholders commencing from March 2025, commencing from next month, to assess the stakeholders' preparedness and identify remaining gaps. The reporting institutions, including licensed bank, will also be subject to this mock evaluation. This is an important exercise that I would expect you all to support and coordinate and collaborate for us to understand the gaps and identify what are things that we need to do more in the actual evaluation, upcoming evaluation 2026. Then there are several other required amendments to some of the legislations. There are 3 pieces of legislation that we are working on. First one, Prevention of Money Laundering Act of number 5 of 2006. Secondly, Financial Transaction Reporting Act, FTRA of 2006. And third, Convention of Suppression of Terrorism Financing Act number 25, 2005. These 3 acts are in the process of revising this legislation to incorporate have provisions to meet new challenges. These have been amended to further strengthen AML safety legal framework Sri Lanka in line with international standards. Those are obviously dynamic. Those are not static, has been all the time improving and changing. So we have to have our legal framework updated to accommodate all these new requirements under global standards. The amendments are nearing completion and are yet to be submitted to the Aegis Department. We are getting good cooperation with the Aegis Department. Also, in addition, the Companies Act number 7 of 27 also needs to be amended to include beneficial ownership requirements that we have already drafted and will be amended soon. Further, important one is the new Proceeds of Crimes Bill. This also already, I think, drafted and submitted to the Cabinet as well, will be enacted, which provides the framework for the management of proceeds of crime. Both the Companies Act amendment and the introduction of new Proceeds of Crime Act are requirements under the structural benchmark of our commitment to the IMF as well. This under, if you can remember, there was a diagnostic study to identify weaknesses in all the governance areas. So this is one of the areas that government has committed to bring in these amendments under the IMF program as well. In addition, in order to factor certain recommendations made by FATF on AML safety, 2 key amendments are incorporated in the Banking Amendment Act of 2024. As you know, there's a new Banking Act amended last year and which was enacted and effective from 15th of July 2024. There were certain amendments were incorporated to support these initiatives. First one, company that is authorized to conduct banking business in Sri Lanka under license issued by the governing board of the central bank shall not include a shell bank. The definition of shell banks was also provided in the Banking Act in line with the terminology used by FATF. Second, assessing the transparency of ownership structure. That's an important requirement of the bank's ownership structure. And beneficial ownership in banks is important for ensuring financial integrity, preventing money laundering, and safeguarding against financial crimes, as clear ownership structures help regulators assess as to whether banks operate ethically, ensuring compliance with laws and regulations. That was the second important amendment that was incorporated in the amended Banking Act. Therefore, the amendments introduced on minimum licensing requirements and criteria to determine suitability of material shareholders of licensed banks. Material shareholders mean that is shareholders having over 10% of voting shares in all licensed banks, have also considered transparency in ownership structures and beneficial ownership as a criterion. The definition of beneficial ownership has also been included in the latest amendment to the Banking Act. This is another important initiative for transparency of ownership of banking shares. With financial innovations such as digital currencies and fintech-driven payments, That's another area that we are focusing in this area under payment and settlement. The regulatory framework must be agile and forward-looking to address evolving risks from the payment system infrastructure, and there are some more safeguards are to be introduced, and these are some of the safeguards that we are going to introduce. First, strengthening the customer identification process is another crucial initiative, particularly in safeguarding funds in the current and savings accounts linked to mobile payments apps. Now need technology adoption and fintechs are coming in, but we have to ensure the safeguard of funds in the bank accounts. Those are linked to those mobile payment apps. Second, revising guidelines to ensure that mobile payment applications meet minimum compliance standards. So these are the things that can be vulnerable from compliance point of view. We need for them to meet at least minimum compliance standards and reinforcing cybersecurity and fraud prevention. So we need to ensure that those are in place. And thirdly, engaging with banks and fintech firms through continuous dialogue, strengthening the regulatory frameworks and conducting both on-site and off-site supervision, that will be done by our department, to ensure a secure and transparent payment ecosystems, while supporting the adoption technology, but we need to safeguard the interests of the compliance as well as the safeguard of the funds in the banking system. Fourth, the benchmarking regulatory requirements with key frameworks such as FATF recommendations, Basel III standards, PSI DSS, ISO 20022, and CPMI principles to enhance financial institutions' compliance measures. These are all, I think, I'm sure in the technical session you will be discussing all these areas. And then we also have some global support coming from APG. The high-level delegation of APG, headed by now the Japanese is the co-chair, will visit Sri Lanka during March 11 to 12, that we have already scheduled, and to update His Excellency the President and the task force and relevant high authorities in the mutual evaluation. You also will be involved in these discussions. Some of you representing the bank sector in Sri Lanka may also be invited to participate the meetings with this high-level delegation for us to get appropriate support from the APG as a co-chair, the Japan. Other regulatory departments of the central bank are also facilitating the efforts of FIU by strengthening the AML supervision process jointly with FIU to enhance AML CFT compliance level of respective regulators. So we have several regulators: bank supervision, non-bank supervision, foreign exchange, all the areas. We have our own regulator joining, working with FIU to strengthen the monetary and regulatory framework. In this effort, banks have a major role to play by enhancing the risk controls put in place to mitigate MLTF risk in the banking sector to prudent levels and ensuring high compliance levels, including detection and reporting. It's important, detection and reporting of high-quality suspicious transactions. This is a very important role that you all compliance officers and banks will have to play by timely detecting and reporting and raising the reports on any suspicious transactions. During the on-site examinations conducted by the FIU together with the Bank Supervision Department when it comes to banks area, the non-compliances with the customer due diligence rules and other regulations, including lapses in identification, reporting of suspicious transaction reports, and conducting customer due diligence on politically exposed persons, and identification of beneficial ownership are still observed. I must highlight that still there are lapses we are observing by our examiners and are raised through examination reports. They can ensure from time to time we publish now also. Be careful that in your institution, name is published for non-compliance of certain things. That's a bad reputation, even for your institutions, especially the banks, because banks need the public trust and needs public trust in safeguarding their funds. Further, failure to comply with AML CFT related regulations will result in increased AML risks in the banking sector, which may lead to financial losses as well as reputational damages, as I mentioned already. More importantly, regulatory sanctions. We have the authority to impose regulatory sanctions that certainly will be enforced if we see the institution fail to effectively implement AML CFT related requirements. In addition, with weak AML CFT compliance culture, may also attract money launderers in different forms, leading to indirect involvement of such financial institutions in illegal activities, both locally and internationally. So you see increasingly illicit activities and illegal, kind of efforts by money launderers associated with using the weaknesses and gaps in the banking system. That's a real risk. Then let me just talk about a little bit on emerging trends of financial crime threats. Today we are witnessing a significant surge in financial crimes fueled by the rapid expansion of digital landscape. So while we adopt a digital landscape, we have to be mindful about these financial crimes associated with the digital landscape. Cyber threats, money laundering, and cross-border illicit transactions are escalating, demanding stronger regulatory frameworks and cutting-edge technology solutions. That's why I think they will mention the chairperson, the use of AI is important. The financial sector has been a significant rise in cyber fraud, phishing attacks, and ransomware targeting financial transactions. They are seeing these things happening in the recent past. Fraudsters are becoming more sophisticated, such as using technology, exploiting digital payment systems, and even manipulating the account holders into revealing sensitive information. A pertinent example that we are seeing in the recent days here in Sri Lanka, where users of banks fell victims to online payment frauds by unknowingly sharing their one-time password (OTP) with scammers. Such incidents highlight the urgent need for stronger consumer awareness campaigns and fraud prevention mechanisms. Despite Sri Lanka's progress in strengthening AML safety framework, the risk of illicit fund transfer remains, requiring financial institutions to enhance monitoring, risk assessments, and adherence to international best practices. It may be useful for financial institutions to adopt, as I already mentioned, the AI-driven fraud detection and transaction monitoring systems to proactively identify suspicious activities and mitigate cyber threats in the real time. I think there's a lot of technologies available, modern technologies. People who process are using it, but I think it's good that formal institutions can also use these technologies to prevent and detect frauds. So what are the key expectations from you all compliance professionals here? We are operating in an era of rapid financial and technological evolution, with digital transformation reshaping the financial landscape. Compliance has become more complex, yet more crucial than ever. Ensuring financial system stability is not merely a regulatory requirement, but a necessity for the economic resilience and growth for the Sri Lankan economy. Today, as we navigate these challenges, we must collaboratively work to enhance our compliance mechanisms and mitigating the emerging risks. Accordingly, the compliance officers, all of you, need to develop effective compliance review programs covering these areas while educating the employees, and this is a good initiative in that regard, including the board of directors, on the importance of complying with AML safety requirements in the country. That's where you are the compliance officer. You need to take that message through the management, up to the management and boards. Further, AML safety compliance should be considered as an effort beyond reporting transactions by all institutions to mitigate MLTF risks of their respective sectors. As compliance officers of financial institution, the vital part of the financial sector, you hold an important role in upholding the integrity and stability of the financial system. Your responsibility extends beyond ensuring that your bank adheres to regulatory standards. You are also tasked with leading the fight against financial crimes such as money laundering, fraud, and terrorism financing. That's where compliance officers become a much more important profession in the financial industry now. By implementing robust compliance frameworks and sharing best practices, you not only protect your institution but also set a benchmark for other sectors, particularly those that are less mature. So we have challenged, especially in other sectors, have less awareness. So that's where you have to lead the role and show the set examples for the sectors for compliance of AML safety requirements. Your leadership in compliance is essential in safeguarding the economy from financial crimes and country's reputation in the global financial landscape. Finally, as a step for strengthening the compliance culture in your institution, you may adopt regulatory technology, RegTech, as well as revolutionizing compliance by enabling, as I already mentioned, real-time risk assessment and automated regulatory reporting using the technology. So with that, let me conclude my remarks. Thank you very much for the participation and also the initiative.